Callum Laing. Callum is the founder and CEO of MBH Corporation PLC. Ooh, big words. And he helps small business owners leverage the capital markets whilst retaining full control of their companies. Well, from my point of view, Callum has been there, he's done it, he's got the t-shirt and he rang the bell. So Callum, it's just so lovely to speak to you. We haven't spoken for such a long time. Welcome to the Crazy Podcast.
Thank you. I'm very much looking forward to it. It has been a very long time since we caught up.
It is. And well, you're the author of 3 books. I've got one of them here.
Yep.
I've started colouring in the dots. If something's here, I colour it. So, progressive partnerships. Then you did Agglomerate,
yep.
And now you've done entrepreneurial investing. Actual 3 books.
Yes.
So, talk to me a little bit about the books before we get in and talk a bit more about what you've been doing with MBH Group.
Sure. So, firstly, thank you for your help. Certainly on the first 2, you were quite heavily involved. So, progressive partnerships was kind of a philosophy that I had pulled together through just starting and building businesses and being young and without any resources and no money to do what I wanted to do. I kind of had to figure out how to partner with people to achieve the results that I wanted. So progressive partnerships was basically that journey and how companies can apply it. And what's interesting is I put that book out 4 or 5 years ago. It seems to have had a real resurgence in kind of the last 6 months with COVID and stuff. Lots of people are passing it around and getting good stuff out of it. So that's very nice. So that was that book. Then myself and my business partner Jeremy and you worked on Agglomerate, and that was really, my business partner Jeremy had come up with an idea to solve a problem for small business owners, which was a lot of our peers had built, ourselves and our peers had built successful businesses, reached a certain level, and then the exits were always disappointing. You kind of read about these companies selling to WPP or Philips or whoever, and it always sounds good. There's always like this big number quoted, but when you look behind the scenes, almost all of these deals are structured as a 3-year or a 5-year earnout, and the founder has to go along with the business. And the problem with us founders is that we're not very good at suddenly becoming employees again. And the idea of having some bureaucratic accountant tell us how we should run our baby that we've been building up for the last decade or more never goes very well. So our friends and peers we were seeing them being fired from their business within sort of 6 to 12 months of that, or leaving in disgust because they just, it wasn't what they signed up for, and leaving a lot of money on the table. So Agglomerate was really our attempt to put forward an idea that we were working on while we were writing the book, which was a little bit ambitious, but it was this idea of create a publicly listed company exclusively for the use of small business owners. So you sort of become the ideal buyer, and then those business owners share in that. It's a sort of a collaborative listing process. So yeah, we put that together. That was, in fact, I got a picture of it. The box is arriving about 4 years ago last week or something.
Wow, it's been that long.
Yeah. So that was quite interesting. And then entrepreneurial investing came out at the beginning of 2020, and that was really more looking at it from the investor side. So Agglomerate was written for small business owners. It was like, look, these are the problems that you're going to face as your business gets bigger. These are the challenges. This is the solution that we've come up with. Whereas entrepreneurial investing was much more written for the investor to say, okay, look, this is why these businesses, and basically, if you think about it from the investor standpoint, you've got half the world's economy is locked up in small businesses like ours. They don't get any press. It's sort of the swimming pool maintenance company in Spain, or plumbers, electricians in the UK. very unglamorous, unsexy businesses, but they make up the bulk of the, or 50% of the GDP, 90% of private sector employment. And there's no way for the capital markets to get into that because they don't want to invest in a single small business because it's too risky, it's too illiquid, they can't get their money back out again. And so you just got this weird situation where you've got half the world's economy that's off limits to the trillions of dollars in the finance markets. And so by positioning what we're doing to investors and saying, okay, look, now we've got a product, a financial product that allows you to invest in 20, 30, 50 small businesses through a publicly listed company. So you can get your money, invest in the morning, to get it back out in the afternoon if you so desire. And also it gave me the opportunity to kind of share the journey, some of the things that we had learnt since the first book, some of the bloody noses that we got along the way. So yeah, that's my book journey so far.
So I speak to a lot of people, creators who create things, create books or create courses or create businesses, but you didn't just create a business or a book or a course, you actually created a business class, an asset class. And for me, that when we spoke about, but when you're talking about Agglomerate, it took me so long to get my head around the change that you were making to the business world for business people. And it took a long time for me to get that because it was just so far out. How this creation process, we go through this creation process. How did you come up with it? I mean, what, like one day just like, let's do a Glamour. How did that happen?
So yeah, I mean, it was Jeremy that kind of came up with the idea, and I remember what had happened was a couple of businesses that we knew had been bought by bigger PLCs and then destroyed. It's a classic thing. We buy your company because you're entrepreneurial and innovative, and then we want to turn you into a corporate. We want you to do everything by the book like us, and the talent all leaves and half the value is destroyed. So we'd seen that happen. Jeremy had been working on grouping businesses together privately to kind of get a better value for them. And he phoned me up one day and he said, look, what do you think about this idea about creating our own publicly listed company? And it just solved so many problems that I'd had as a small business owner. And I could think of like a dozen people without even thinking about it, sort of, my friends that would solve a problem for. So yeah, we became business partners and started working on it. And then, it's just the thing with creative ideas is they're always brilliant when you first have them, and then you have to test them against the market. So I remember the first time we pitched this to a business, we said, look, we really don't know what we're doing, but if you give us 100% of your company, we'll put it into a public company shell, and that'd be really cool, right? And funnily enough, that pitch didn't go down particularly well. So we just kept refining and de-risking it for the small business owner, so that basically they could back out right up until the last moment, because that was really the only way we could start to get that traction. And then you get out there and test it and smack your head against the wall until something breaks. And hopefully it's the wall and not your head.
Yeah. Because like I'm imagining that. So I'm imagining you go to a small business and you say, right when you were starting getting this out, this idea of getting feedback from the market. Because from my point of view, you there's chaos. We're living in chaos. There's all this chaos over here. And our jobs as entrepreneurs, as creators, is to make something out of the chaos. So you solved a problem that you were having, that you could see a solution to a problem that you were having and that your friends were having and your colleagues were having. But that process of feedback, taking it out to the market, getting feedback, bringing it back in, were you afraid? Did you just go out there and say, right, I've got this idea. How do you think? Was there ever a moment where you were too afraid to put it out there? What was going through your head?
Yeah, I think you always questioning whether it kind of makes sense. I think the more you do it and the more failures you have, the more you realize that the failures aren't fatal. And so you can be willing to put yourself out there, knowing that even if you don't get the result you're looking for, it's probably a good launch pad to something else that you haven't even thought about. So that's kind of the way I approached it. And then actually it was much harder the second time, because the first time we did it, we quickly realized that when you're pitching any new idea, you need to be pitching to people like you, visionaries. So for example, the first group of companies that we went for were all marketing companies. Marketing founders are typically creative, they're visionary, they can see the future. Yeah, it would never have got off the ground if we tried to do a bunch of engineering companies or accountants, because they need to see 50 years track record before they make a decision. So we had that, and then happy to go into it after this, but that didn't work out the way that we had hoped it would work out. And actually the harder piece was picking ourselves up after that and going out and trying to pitch the same idea again when people just keep saying, yeah, but look, that one didn't work out, so why should we trust you on this one? And that was where we really kind of had to call back into the sort of the bigger why behind what we were doing. Unfortunately, with this particular idea, there was a very strong why behind it, which is, look, if we can help good small businesses get bigger, you help a $10 million business go to 20 million, they can't do that without adding 100 headcount. And that has a far bigger impact on the economy than your average little next Instagram app or whatever. But that's where all the focus is on that sort of high-tech, high-growth stuff. Whereas we liked working with these well-established businesses that actually solve a real problem and generate cash. So going back to that sort of bigger why of why we were doing it was really important to keep us motivated.
Okay, let's go. Let's hit. So it was your first agglomeration was TMG, the marketing group.
Yes.
So tell us what happened. So how many founders did you bring in? How many people did you get in? Companies did you bring in?
So I mean, it was a whole process. I think we originally intended to have 20 founders in the group and then go public, and then we got to 7 and decided that was enough, and then 3 of those dropped out for one reason or another. So we actually went to market with 4 and realized that 4 was way too many already, because trying to go public with 1 company is a pain. Trying to do it with 4 small companies is very painful. But anyway, we got listed, and because we'd pitched this to so many people, what we'd had was a lot of people said, look, we love the concept, but we'll wait until you're listed and then we'll come and join, which is fair enough. So what happened was we listed, and suddenly like everyone wanted to be a part of it. And so a couple of things happened that kind of compounded that. The market we were actually listed on the European NASDAQ in Sweden. And the Swedish retail investors just loved the story, and there wasn't a lot of stock for sale. So everyone was trying to buy the stock, which just ramped up the share price. And of course, as the share price went up, the original founders were like, whoa, this is the best thing ever. And everyone else wanted to get in quickly because they wanted to get in before it topped out. So in that first month, we added a couple of new companies, and the next month we added 4 more companies, and the month after that we added 4 more companies. It grew to 17 companies in 90 days or something.
Wow.
The market cap of the company, so the share price went from €1 to €9.50 in 100 days. So the market cap went from 14 million to 300 million euros in the space of that time. And then we kind of came unglued, because we were getting bigger and bigger companies wanting to join the group, but they needed cash out as part of the consideration. Sometimes they had like debt on their books that we needed to buy out, or they had minority shareholders. And so we said, well, look, a 300 million market cap company, we can get cash. But of course we couldn't, because we'd only been listed for 100 days at that point. So we got approached, we actually had it recommended to us, a financier in New York. He said, look, we do this all the time. You lend us the shares. We'll put it in an escrow account. We'll lend you some money that you can use to solve the cash flow issues, and then you just pay us interest every month, and you have the shares back in 2 years. Sounded like a great solution. And as far as we know, this bloke had never previously broken the law, but
always the first time.
Yeah, and it subsequently turned out he did this to 3 companies. He did it to us, a company in Hong Kong and a company in Australia, all at the same time. And we think he made about 72 million. Basically what he did was, we sent the shares, we never got the cash. He dumped the shares in the stock market and took the cash himself.
Wow.
Now, of course, if you dump, this was 3 million shares, if you just dump shares, so the share price kind of went from €9 down to euro or something, a couple of euros. So that was an extreme. I don't think I slept for about 2 or 3 months. We were just getting hammered from everyone, and eventually one of his team turned whistleblower and reported him to the SEC and said, this is what he's been doing, these are all the emails, this is all the proof. And they said, none of these companies are in America, it's fine. So what you discover is trying to prosecute white-collar crime over international borders is nearly impossible. Yeah, that was quite painful. Actually, the biggest mistake we made was, and this was down to our lack of experience, was everyone advised us that what we should do is get ourselves off the board and put some old grey hairs on the board and restore investor confidence. And in retrospect, that was actually the worst thing for us to do. We should have sat there and dealt our way out of it. Because once his 3 million shares were gone, yeah, we still had great companies in the group. We're still doing that. Anyway, so we came off the board. We lost control of the board. The new board did absolutely nothing. Well, the first thing they did was gave themselves huge salary pay rises. Then they tried to rebrand all the companies, which nobody wanted. And eventually they tried to do a startup in the crypto space exactly when crypto all fell away, and then eventually delisted and came off the market. And interestingly, the companies in the group were fine, because the holding company was completely separate, and the share price is not a reflection of the underlying value. So each of the companies just withdrew. They just pulled out of the group. We're still in touch with a lot of them. In fact, there's a couple that want to join us in the new venture. But it was an incredibly painful, hideously expensive lesson to go through. And we had staffed up. We did the first listing with, I think, a team of 6. We staffed up to about 50 people in a few months. Wow. Just in order to deal with, we had all these deals coming to us, we had media chasing us, and yeah, all of that, all the money suddenly dried up, so we had to kind of lay off all of those people, and that was pretty brutal as well. So it was tough, and it took us about two years to recover.
So you were telling us about this journey that you've been on. So a few years ago, you and Jeremy came up with this brilliant idea to solve your own problem. You had your own problem. You'd seen your clients and friends were having the same problem, and you came up with this idea to solve this problem. You tested it out on a few people. You pitched it to them. They thought you were a bit crazy. They thought you were probably bonkers. So you refined this pitch. You got closer and closer and closer to what people wanted. Once you refined the pitch, you and Jeremy just said, right, let's do it. Let's make it happen. And you went ahead, you charged ahead, and you did it. And you listed a company. You did an IPO. at that point, everything looked like it was going brilliantly. All the figures were going up. Everybody was applauding you, and you had like, you know, everybody wanted to get in on this fantastic idea that you guys had come up with. And then things started getting a bit sticky and a bit icky. You took some bad advice from a dodgy banker in New York, and bad advice, and the board changed to grey-haired old guys, and we don't want those around. We want no-haired old guys. No.
Absolutely.
And things started to fall apart. So what was started off being really fantastic and a brilliant idea and was going really, really well and everybody wanted to have a part of, started falling apart. Now, most people at that point, most sane people, would go, right, okay, maybe, you know, maybe that wasn't the right thing to do. Maybe it was a bad idea. You guys didn't do that. What happened? What did you do next?
Yeah, so it was incredibly tough, but I think ultimately we came up with the realization that there had clearly been demand for what we were trying to do. First, we knew it solved a problem for us, but it also solved a problem for lots of other people. We also realized that if we didn't do it, it probably wasn't going to get done. And because small business owners are just flat out running their own business anyway, the finance world doesn't think of small businesses as viable on their own. They think of them as something to exploit. So you have lots of people that do kind of these roll up and lists where they'll buy a bunch of small businesses, they'll fire the founders, they'll try and consolidate them all. Lots of people have done that, but it never starts with what's right for the small business, what's right for the founder. And we were coming from this bottom-up approach. We genuinely believed it was the right thing to do. We also we genuinely believe that like that bigger why driving it, which is if those companies are successful, it adds a lot of headcount. The business owners themselves get liquidity. Like anything cool that's happening in philanthropy right now is being done by entrepreneurs, but normally they're practically geriatrics by the time they've kind of got enough liquidity in their lives to do it. So if we can forward that process by 20, 30 years, so that those founders can go out and solve bigger problems. So we kind of had a very strong why to try again. And, you know, the problem with, or I guess the advantage of so much stuff going wrong so quickly was that we kind of got 10 years worth of lessons compressed into a very short, excruciatingly painful period. But it did give us a huge amount of learnings, and it did mean that when we were able to launch MBH as our current business, it was a much stronger proposition from day one, much better protected. And I think people always say, at the end of the day, it was the best thing that could have happened to us. I'm not quite there yet. I think I could have learned some of those lessons without getting kicked in the nuts, but ultimately we learned a lot, and it is a much stronger model because of those learnings.
Okay, so you picked yourselves back up. You said, right, we've got our big one. We know why we're doing this. This is important. We can't, if we don't do it, nobody will.
Yep.
Okay. So you got your big why, you went, charged ahead, and you said, right, let's do it again. So you brought all the lessons that you'd learned, the 10 years worth of lessons that you got in a couple of months. You picked yourselves up and you got on with it. So tell us now about MBH. Tell us about the MBH Group and what's going on, how you started it again, and how good it is now.
Yeah, so MBH, we listed it, so it's a UK PLC. It's listed on the Frankfurt Stock Exchange, which is a regulated market. It's one of the biggest in the world. It's very liquid, so it means there's a lot of shares being traded. We started with an empty shell this time rather than 4 small businesses. We brought in, we decided to, rather than do one industry vertical, we wanted to be across multiple industries so that if there was a downturn, for example, actually during all of that stuff that was going on in marketing, there was also a bit of a marketing downturn as well. So we wanted to be protected across multiple industries. So we listed in Frankfurt coming up to 2 years ago, so sort of November 2018. And we have now added, as of last week, I think we're up to 17 companies in the group. We've got a combined revenue of $100 million, $10 million of EBIT. We issued our dividend after the first year. So there was 110 companies listed in Europe last year, and by various different metrics, we're in the top 3 fastest growth for revenue and profit, and one of only 5 to issue a dividend. So yeah, it's going fantastically, and we just got such a good group of business owners in the business, and you know, we've been through COVID, which you know is kind of as good a stress as you would like to put on the small business world, but the companies have worked so well together. I mean, even though they're different industries, different countries, they all have a vested interest in each other's success. And so, and they're all veteran entrepreneurs. So they've all been, you know, the average age of the companies in the group is, I think, 23 years old or something. So they've all been through downturns before. And so when COVID happened, they just rolled up their sleeves, got on with it, shared best practice amongst each other. And yeah, it's been fantastic to be a part of. It's yeah, real pleasure.
So, and this time it sounds like the growth, the immediate growth was a bit more calm, slower, you controlled.
Yeah.
What else did you learn? So are you guys still on the board? I mean, you didn't.
Yes, Jeremy has had enough. Jeremy got beaten up. So he's sits behind the board and does the kind of the deal sourcing and stuff. I sit as the CEO on the board. Yes, I think the most obvious ones to the external world are the fact that we are across multiple different industries. But I think there was, yeah, the fundamental idea is the same. You find good, well-run companies, you bring them in and you leave them alone. And that's really the heart of the model. And it's incredibly attractive, and it gets more, it kind of snowballs, because the more companies that are in the group, the more case studies you've got, the more you know, people can talk to someone like them. And then we've got companies coming in. I mean, we've got companies in the group, caravan company, which is now looking like a genius move, because everyone's buying caravans. Actually, it's pure luck. But yeah, we've got a taxi company that joined us recently in Leicester, but they've got a shopping list of like 65 other taxi companies that they want to bring in with them. So we just acquired a real estate company in the US, and again, they want to kind of consolidate the brokerage industry in the US. So it's just really, yeah, really exciting, and just good people, well experienced business owners that like to yeah, work with other good entrepreneurs.
Sounds wonderful. So I mean, it sounds wonderful. I'm imagining people out there thinking, well, my business is about 20 years old, we're profitable, we're doing quite well, but I can't work out how I'm going to retire, I can't work out how I'm going to get out of this, who's going to take my business on? What should they do? What type of companies are you looking for to join you in the future?
Yeah, so I mean, we kind of have our I guess our target market, which is doing somewhere between, in UK terms or Euro terms, sort of say half a million of profit to 5 to 10 million of profit. That's kind of our sweet spot. Pretty much any industry. Right now we've got transport, we've got leisure, we've got construction, we've got education, but yeah, open to pretty much any industry. And I guess the big distinction is these companies aren't for sale. Like, the founders don't want to lose control. You know, they're, like you said, they're probably starting to think about, what am I going to do in 5 years' time? Pretty much guarantee the kids don't want to take over the business. So this is a really good option for them, because once they do get to that point where, so they can join us, they get the liquidity of the stock, so they can start to sell down, take some money off the table. Their risk is spread across 20, 30 companies rather than being all in one company, which, as we know, can be a little bit hairy. And then when they do want to retire, you've got a whole bunch of other companies in the group that have a vested interest in its success. So it's very likely that somebody else in the group will say, well, look, I'll take over the running of your business. I've got a young manager coming through. I'll put them in and I'll oversee it. Because the way that we structure the deal, it's the same for everyone. They get a multiple of their earnings on day one, and then every year thereafter, it's a perpetual earning. So the more successful they are, the more shares they earn. But that means that when somebody wants to retire, another company in the group would want to take over that, because then they get the bonus shares moving forward. So yeah, it's quite a nice solution. I think 70% of all small businesses are owned by baby boomers. So they're starting to think about what's next.
We are starting to think about what's next. Yeah, I know. Okay, so fantastic story. I mean, like a roller coaster journey of I mean, you know, I saw you ring the bell and I was like, oh my God, it's my mate and he's rang the bell. So anyway, what sort of advice would you give yourself now if you could go back right to the beginning of this Agglomerate journey? If you could go back, what advice would you give yourself?
You know, annoyingly, we just had to get through it. It's the problem is when you're doing something that hasn't been done before, there isn't really anyone that can advise you. You know, the finance world told us it couldn't be done because you can't trust entrepreneurs. Turns out you can't trust financiers. I think, yeah, I mean, I think we probably rushed it a bit, but equally, I think you need to, like, the opposite of that is waiting for everything to be perfect before you do it, and the reality is it's never going to be perfect. So better to get it out, learn the lessons, iterate, and move on. Yeah, so stick with it.
Stick with it, iterate. I love iterate. Yeah. That's one of my key things. Like, you never know, just keep going. What's next for you? What's happening next? So you've got MBH going on. What else are you up to? If you got anything else that you can be up to with that going on? I mean, what's happening for you?
That's pretty much full time. Although, as you know, I weirdly launched a podcast.
So, I love your podcast. It's fantastic.
Thank you. So yeah, that was another creative endeavor, and that was actually partly that was triggered by talking to the business owners in the group. So we'd have these regular calls, and I'd listen to how they were overcoming challenges, and it was just so inspiring listening to them. I thought, I wish there was a way of sharing that with the wider world. So yeah, as you know, so I put together a system where people can go onto, entrepreneurs can go onto this webpage, they record a 3 or 4 minute answer to the question, what's the biggest challenge that you've overcome in your journey, and what did you learn from it? And then, yeah, that's now it's a daily podcast that's been going, launched at the beginning of August, and it's going crazy. I think we've got guests up until the middle of October signed up. We've got the downloads are going nuts, and I've now got people wanting to buy the whole concept off me, like white label it and do their own, like, parenting tips or nutrition tips or stuff like that. So yeah, what was just a little sideline because I was bored one weekend has just taken on a life of its own.
I think entrepreneurs, we can't stop you, can we? I mean, it's like you're always thinking, how can I share this issue? How can I solve this problem? Okay, so I'm going to start wrapping us up a little bit, because what I just want to know from you right now is this, you know, you talked about this bigger why. That's what kept you going when you were having months of sleepless nights, when you were screwed over. That bigger why. What is the bigger why for you? Because, you know, what I think you've even got an even bigger why. So tell me, what's your bigger why? What gets you up in the morning?
So I think one of the things I figured out a while ago was I kept looking for kind of I've been an entrepreneur for 25 years, and I keep bouncing around different industries and kind of looking for what would be the perfect thing. And I realized, well, that's not the way to do it for me. It's to find, who do I want to be working with? And what I realized was, I really like working with small business owners. But I like small business owners that have been doing it for a while. They've reached a certain level. They've got that experience. They've got the war stories. Whereas to me, no offense to kind of young startups, but that space drives me out the wall, because it's like there's nothing there. It's all like, and in the future we're going to just get 1% of the market, and so, okay, yeah. So basically, what I started with was, look, these are the people I want to work with, and so this is my sort of ideal. Yeah, I'm in exactly the right space. I get to spend all day, every day, talking to cool business owners, and a lot of retired business owners that become investors in what we're doing because they love what we're doing, and yeah, it's great fun.
And obviously, with your newest book, with the entrepreneurial investing, you're actually educating investors as well, so that they can get part. So you've kind of covered both sides of the problem for everybody. It's been fantastic. Is there anything I haven't asked you that you want to tell me?
Not while it's recording, no, Debs.
We'll stop recording. We'll speak later. Callum, it's been awesome to speak to you again. It's lovely to see your smiley face. Likewise. And thank you so much for your time. Ciao.